Thanks to the recent unprecedented success of Bitcoin and Ethereum, the alternative cryptocurrency market is seeing a rapid free-for-all. Both old and new altcoins are garnering more and more support as individuals catch the cryptocurrency craze. Social media platforms are ablaze with posts speculating what the next best coin is and how you need to invest now to make it big. But how much of this talk is just hype? Within my project, I analyzed 21 cryptocurrencies' Twitter activity and market performance from the start of 2021 to the end of April 2021 to determine whether or not the cryptocurrency's daily price momentum can be predicted via Twitter activity. In order to start this project, I first had to go about collecting data. For the cryptocurrency market data, I was able to acquire historical data from investing.com. Using their date selection tool, I was able to collect daily price data from January 1st, 2021 to April 30th, 2021. I completed this process for each of my 21 cryptocurrencies. For the Twitter data, I wrote a Python script that utilizes multiprocessing and threading to efficiently web scrape all tweets containing the cryptocurrency's cache tags. The script can be called via terminal commands. Within the command, there are various parameters: the inclusive start date, the exclusive end date, the query string, aka the cache tag you want to search all tweets for, the number of CPUs you want to use, and the number of threads per process. By incorporating threading and multiprocessing, I enabled my script to web scrape hundreds of thousands of tweets in mere minutes. Within the script, I utilized the Twint API. Twint is an advanced Twitter scraping tool that allows you to scrape a variety of data from Twitter. I chose to use the Twint API instead of Twitter's API, as Twitter's API has very small rate limits and only provides a sampling of tweets, as opposed to the entire archive. Then, I ran each of the script commands in my terminal. Once I collected all the tweets for each of the cryptocurrencies, I then had to clean, analyze, and aggregate it. To clean the data, I removed unwanted text. Then I performed sentiment analysis, calculating the polarity and subjectivity of the tweet text. Polarity is a float which lies in the range of -1 and 1, where 1 represents a positive statement and -1 represents a negative statement. Subjective sentences generally refer to personal opinion, emotion, or judgment, whereas objective sentences refer to factual information. Subjectivity is a float which lies in the range of 0 to 1, where 0 is very objective and 1 is very subjective. Finally, I aggregated all of the tweets by day. Then I calculated the daily Twitter activity measurements. With my cryptocurrency market data and clean Twitter data all collected, I had my final dataset. Within this dataset, we have the date, cryptocurrency symbol, and daily price momentum, which is the change in the closing price from the previous day to the current day. Moving on to the Twitter data, each row is representative of the tweets from that specific date that contain the cache tag for that specific cryptocurrency. We have the total number of tweets. We also have sum values, which sum the number of replies, retweets, likes, subjectivity, and polarity for all of the aforementioned tweets. We also have average values, which, instead of summing, average the number of replies, retweets, likes, subjectivity, and polarity for the aforementioned tweets. Finally, we have the most common tone, which is calculated from polarity and can be negative, neutral, or positive. As previously stated, my goal was to determine whether or not the cryptocurrency's daily price momentum can be predicted via Twitter activity. Because this involves daily data, I chose to use time series models for my analytical models. I split the dataset into training and test sets based on chronological order. Within my training set, I included all rows within the first 3 months of 2021, and within my test set, I included all rows within the 4th month of 2021. For the linear trend model, I created the time period field, which counts from the first date observation to the last date observation. I then used this field to predict momentum. For the simple autoregressive model, I created the momentum yesterday field, which is the momentum from the previous day. I then used this field to predict momentum. For the higher order autoregressive model, I created the momentum 2 days ago field, which is the momentum from the previous 2 days. I then used this field and the momentum yesterday field to predict momentum. All of these time series models are pretty simple, so it's not surprising that they did not perform well either on the training sets or the test sets. As I continue to work on my analytic models, I intend to try out more advanced time series models that will also incorporate my Twitter data. A model that successfully predicts cryptocurrency's daily price momentum via Twitter activity would be very useful to many people. For instance, this model would allow cryptocurrency traders to make more educated trading decisions, thus taking some of the risk out of the process of investing. This model could be expanded to analyze longer periods of time, which could help provide a better understanding of overall cryptocurrency trends.